Hello, everybody. It's Rod with Pow Group. Welcome back in the pursuit of wealth. It is Sunday evening here where I am, and hope you're doing well. It's April 6th. The market sell-off is picking up steam. We just had futures open up, and things are really starting to look pretty bad at the moment. So I wanted to come on, do a quick live stream. If anybody does have any questions, any requests, please let me know. We'll get started here in about a minute. Bit of a last-minute live stream. So we'll give it another minute or so for people to jump on. Nature Lover, hello, hello. Welcome to the live stream. Make sure to smash the like. Let us know where you're tuning in from as well. There's all the beautiful people. See a couple dozen people rolling in so far. Welcome, welcome. We're going to get started here in about 30 seconds. Cheers, Panos. Thanks for joining the live stream. And we're going to get started here in just a couple seconds. What's up, Adam? What's up, Martin? We'll get started here now, everybody. Welcome back on the Pursuit of Wealth. It's Rod with Pow Group. Market sell-off is picking up steam, so we're going to jump into a quick live stream. We'll take a look at some charts. Futures did open up, and futures were down on the S&P 500 about 4.6%. It is starting to bounce back a little bit here now, and a lot of fear that we could potentially see a Monday like Black Monday. I don't think it's going to be that bad. I mean, you have to remember that we've seen a huge boom really since 2020, and nothing goes up forever. And the reason why the market is selling off is just because it's overheated, right? We were monthly overbought on the RSI. Everybody wants to point to tariffs, this, that, and the other. But in my opinion, it's just a reason. It's just a way to scare people. It's just a way to blame the sell-off on something. But as we know, if you've been around charts or the market for any longer than 5 minutes, when things get exaggerated to the upside, they get overheated to the upside, we need to expect a significant pullback. And I've said this many times, the S&P 500 is accustomed to around 10 to 14% on average return per year. And we had like over 100% gains in just a few years, right? So it's not sustainable. I mentioned on my last video, I posted this video a couple days ago, the end of a 5-year bull market. I said it wasn't even that bad, the sell-off that we were seeing, and it was more than likely going to get much, much worse. And even with the sell-off that we're seeing here after hours, with futures launching, it's still nothing. We're still extremely bullish. We are losing the monthly uptrend though on the S&P 500, so that's a huge red flag. So I think the long-term top very well could be in. Doesn't mean we can't see a huge dead cat bounce and relief rally, but I'd be very, very cautious if you're looking to long the S&P 500 or certain stocks, especially tech, AI. All of that is going to be more than likely in for a rude awakening. We'll jump into the chat here in just a moment. Toward the end, but we will take a quick peek at some of our charts. Before we do, make sure to smash like, all that good stuff. Help support me in the channel. If you're new, you can subscribe, tick the bell, all that good stuff. You'll be notified on any future videos or when I go live. And as always, not financial advice. This is for entertainment purposes only. You can follow us over on X as well, formerly Twitter. Handle for that is @GroupPow. Going to be using that as my platform of choice going forward. So there's been a whole flurry of things coming in. Zimbabwe to remove tariffs on U.S. imports to build a positive relationship with President Trump. You've got India to negotiate a new balanced trade deal with the U.S. to avoid President Trump's tariffs. So while it looks bad at face value, just in, Elon Musk calls for the United States and Europe to establish a zero tariff system and a free trade zone, right? So you have the NAFTA, the North American Free Trade Agreement, and you're more than likely, I'm pretty sure, was it Congress that wanted to step in and remove the tariffs on Canada. UK Prime Minister Keir Starmer seeks new trade deal with the United States to remove tariffs. So you're starting to see the aftermath, right? In my opinion, it's just a negotiating tactic, and it's going to make the world even better, in my opinion, right? All of these, because the U.S. has been paying tariffs in other countries since forever, and whenever they do it to other countries, right, that's when people start to. But they've been taking advantage of the U.S. We all know that. But yeah, there's a lot happening here. In the background right here, it is just in U.S. Senate votes to terminate President Trump's tariffs on Canada. So we're starting to see some intervention from Congress as well. But you can start to see, the light at the end of the tunnel and where we're potentially going after we come out of this mess, right? And it's more than likely going to be more free and open trade. So I think this is just the initial shock, but it's all part of the plan to eventually make the world more seamless. And yeah, we'll see what happens here. But crypto and AI, it's going to also help with trade and the US dollar, the world reserve currency status. That's not going to be a thing for much longer. No one country should have that status, right? It's not fair to the rest of the world, and there's no other country in the world that maybe some country, maybe country in Europe or Russia or something like that, but I can't see any other country or even the US maintaining that. I think they're going to replace it with a digital currency, more than likely an XRP. It's just alphanumeric code. It's not controlled by anyone. I'm not talking about Ripple, the company. I'm talking about XRP, the digital asset. That doesn't, Ripple's a company, it has a board of directors, has a CEO, right? That's not the same as XRP. XRP is just a ledger, right? It was created before Ripple, the company. It's just alphanumeric code. It solves the problem of trust, and two nations don't have to trust each other, right? You can just rely on this open source software and blockchain that you can see all the transactions, and you don't have to trust another country, right? And then you'll have that one transparent world reserve currency that everybody can jump in and out of. But then you're going to have, your private ledgers, you're going to have your CBDCs. No country's going to want to put all of their spending on an open blockchain, a transparent blockchain. So when you're cross-border, when two countries or two nations are doing, if they're transacting, they're fine using the open ledger. But if it's the inner workings of your own government, you don't want all your secrets out to your enemies and stuff like that, right? So you're going to have private ledgers and whatnot. But we're starting to see a bounce back here. We did lose 80,000 on Bitcoin. We did touch down to 77,000. I mentioned for a while now that we more than likely could see 75,000 potentially before we saw another move up. And XRP, we had 2 monthly inside bars, and we hit $1.86 here. So we had $1.89 was the low of the last monthly inside bar, and we're bouncing back here now. So this could be a huge bear trap, in my opinion. We did have a daily bear flag as well, targeting 175 on XRP. We were talking about that in the POW Group private community, and we've been shouting from the rooftops for a while now that we could potentially see that come to fruition. And it is basically just the crypto market joining the rest of the broader market route, right? But we are starting to see a little bit of a decoupling. Not enough data yet to say it's a decoupling from traditional U.S. equities, but I would say that the reason why we're seeing crypto a little bit hold up a little bit better here, and I mean XRP is almost at $2, right? We're sitting at $1.92. We were just at 40-50 cents not too long ago, right before the elections in November. So the fact that we're at $2, that's a win in my books, and my portfolio's all smiles, really. So, and 80%, over 80% of my crypto portfolio is in XRP. So I'm doing just fine, mentally, emotionally, financially, and diversified. So I own about a dozen different cryptos. I've got, my retirement account is 95% money market fund. It's been like that for about 2 years now. And there's a reason for that, right? Look at Warren Buffett. He's sitting on record amounts of cash, and most of it's in money market fund as well, right? We don't know when the stock market's going to come to an end. But why would you want to risk giving back all those gains in the last 5 years? That's just not, I don't care if I can't time the top, right? I've been wrong for 2 years, right? I thought the top was almost going to be in like 2 years ago, right? But now my portfolio is only down like 2% in my retirement account versus like 40% or 30% if I had it into aggressive assets, right? And then I got my long-term holds, my crypto, my alt, my MJ stocks, right? But I've also got a crap ton of cash right now that I'm sitting on. I've also got, like I said, 95% of my retirement account in money market funds, which is effectively cash. And I have 5 real estate properties, right? 2 of them are long-term, 2 of them are short-term rentals. So they're passive income as well. And, you're diversified, right? So all of these things we need to be aware of and make sure that we have a plan and understand that you can't time the top. But how bullish were we on the S&P 500? Just seems like no matter what happened, we just kept melting up, right? And then eventually the tables turned, and now you're starting to see how quickly things can go the other way. And in my opinion, it's not even that bad of a crash so far. So we're doing just fine. XRP, I do think that we're going to see some escape velocity here in the next couple of months. Paul Atkins is more than likely due to be in the SEC, taking the helm there, more than likely within the next couple of weeks, few weeks at the most. And yeah, we'll jump into The charts here, ES1, which is the S&P 500 E-mini futures on the CME. You can see here we dropped another 4.7%, 4.8% from the low of Friday. So we could potentially see the S&P 500 down another 3 or 4% tomorrow, but we might recover into tomorrow. Everybody and their dog, what do we know when most retail expects something? What do we want to do? We want to be the opposite. Jim Cramer also said that we could potentially see a Black Monday. What normally happens when Jim Cramer on Mad Money says something? Usually the opposite, right? He's the news for the masses, not for the classes. So generally expect the opposite. Everybody and their dog I know, retail investor, average Joe and Jane, like myself, everybody's expecting a Black Monday scenario. I think this futures could potentially accelerate the sell-off. We're seeing crypto catch up. So it's going to be like, oh yeah, definitely a Black Monday. Look, even crypto's selling off now. Risk on assets are going to take it on the chin tomorrow, but then, we might start the day off a little bit shaky, some turbulence, some red into tomorrow. We'll see if it's going to be a red Monday, a green Monday, or a Black Monday. But my money's on a red Monday and then a recovery into later on in the day. And then we should be due for one epic rally here. And if not a dead cat bounce, a relief rally nonetheless. And I do think that we should see a pretty big face ripper rally here before the end of this bull market, before we enter a multi-year bear market rather. But if we were to drop on SPY, we closed at 505 on Friday. So if we were to drop, based on the futures here this evening, if we were to drop another 4% into tomorrow, that'd put us down around 480. I mentioned in my live stream, my last video, the end of a 5-year bull market, I said watch 479, I think it was. So if you zoom out to the monthly time frame here, yeah, it was 479 because that was a double top and old resistance before the massive sell-off in 2022 into 2023. So we had that huge sell-off of about 26%, and now we're down about 17%, and we could be down somewhere around 20, 21% on SPY tomorrow, given the futures weakness here. But we were down about 27%, so that 479, very, very strong resistance at that point, and then we sold off 27%. So how does it work with technical analysis? Old resistance becomes new support and vice versa, right? So this is just technical analysis 101. I mentioned that we closed at the low of the week last week. We closed at the low of the day. That wasn't a good sign. So I said watch for 500 to more than likely to be lost, and we did have support there at 493. And then, like I said, I would expect that would ramp up into next week based on the weekly and daily candle closes being very, very bearish at the lows. And I said watch 479. So we could see that act as old resistance becoming new support. It's classical technical analysis 101. But again, if you know nothing about charts, just plop the RSI indicator into your chart. You will see here that anytime we've been in this territory here, it's generally never a bad idea to take profit or to be getting out of the market. I'm not telling you to get out of the market. Now it's not the time because we're no longer there. Right now we're in the buy zone. Typically we bounce out of this zone. So we're more than likely at least due for a relief rally. We'll probably see the RSI come up and get back into, I would say, probably into the 60s and then form a lower high. And then we'll probably be heading to monthly oversold, I would say, at some point in 2026 as the most likely scenario. Again, look at the .com days. We had the hidden bearish RSI divergence into 1996 into 2000. We were trending higher lows and higher highs, lower highs and lower lows on the RSI. And then effectively, we went to monthly oversold. It took about 77 months or 2,344 days to hit that oversold. So let's just go in terms of years. So from 1996, actually that's too confusing. Let's go here. I don't want to spend all day on this either. So let's just see how long it took in terms of months. So it took 77 months for the price to go to monthly oversold. And look, same thing's happening now. The RSI peaked in 2018, and then we higher lows and higher highs, lower highs, lower lows. So that's called hidden RSI bear divergence. So if we go 77 months from 2018 and where that peaked, you're looking at, we're already past it, right? So we're at this point, we're already at, let me do that again. We're already at 87 months. So I would expect a pretty big recovery here, more than likely a monthly lower high, and then a dead cat bounce, and then we'll confirm a monthly downtrend all in one go. We lost the monthly uptrend, but we're still not in a monthly downtrend. The trend is flat. So once we lost this higher low, higher high pattern, which was 510, once we lost that, we're no longer in higher low, higher high mode, right? So once you're no longer in higher low and higher high mode, you lose the monthly uptrend, but we didn't confirm a lower high and a lower low. So what that would look like would be this, a lower high, and then a lower low compared to this low. So we still haven't gotten that yet. So that's why I think we're going to see one massive rally here, maybe even, a type of wake-off distribution method where we come back up, set a brand new all-time high. I think that's very possible. I don't think it's the most likely scenario, though. I'd say maybe a 20 or 30% chance that happens. But I would say more than likely going to come up, form a monthly lower high, at least somewhere around 550, 575, and then we'll confirm a monthly downtrend, sell in May and go away. And then that'll be the end of the bull market, and then more than likely heading to monthly oversold. And in that monthly oversold scenario, you have to remember that in the dot-com days, we sold off about 51%, about 50%. So if we were to see something similar, that would mean we would be down around 306, which that's still really, really good. From March 2020 to 300, that's 37% up, right? So in 5 years on the S&P 500, we should only be up around 70% on average, right? The S&P somewhere around 12% is the average per year. So we should only be up, like I said, about 70%. From the lows of March 2020, we were up 180%, folks. So, and again, if you know nothing about charts and technical analysis, we were just in monthly overbought territory. Anything 70 and above is considered overbought. And we had this hidden RSI bearish divergence, right? And we had the biggest rally in the history of rallies, right? We've never, I don't even know if that's happened before, like in such a short period of time. Here we ran up 100%, but that took, I guess it took a few years. From the low here of 2008, we were up 216%, but that took like 6 years. So yeah, there's been some cases where, we do see that happen in, 5 years, 4 to 5 years, but it's usually after a massive crash, because that's the only thing that makes sense, right? You'd never be able to see 100 or 200% gains on SPY unless you had a massive crash first, and it's more than likely some sort of black swan, right? And we had the financial crisis, we had the dot-com bubble, so all of these things, you had C19, right? But again, they always come when the markets are extremely overheated, right? These crashes here, right? They never happen. You never see the financial crisis when we were at monthly oversold. Oh, no. That would never happen. The elites wouldn't allow that to happen, right? And then same thing here. In the dot-com days, right? No way we were at all-time lows. No way you have these black swans like financial crisis or C19. C19, again, happened at all-time highs. Sounds like it's manipulated to me, right? So 100% it is, right? And all these whales, right? It takes them about 6 to 8 months on average to get in and out of positions to switch from net short to net long. Guess how long it's been really since we've been at all-time highs? It's been 4 months. So we could form that lower high, one last final chance for the whales to get out, and then they'll have no reason to keep it up. And if Congress gets banned from owning stocks like the Fed did in 2021, and then we had a massive sell-off right after the Fed banned themselves, it won't be good. And even if we go to 300, that won't even be that bad, right? Like we would still be, from the low of March 2020 to 300, we would still be up 37%. So it's all about perspective. I don't even watch the news anymore or care to look at the news. I've been 95% money market in my retirement account for almost 2 years, right? I'm not looking at headlines to start making decisions on when to be flipping net short or net long, or when to be going into cash and when not to be going into cash. I'm looking at how well the market has been performing over the last few years. How much am I up, right? I'm not going to get greedy. I'm going to be greedy when others are fearful, which is now, and I'm going to be fearful when others were greedy, which was the last couple of years, right? So that's why I'm getting out ahead of the herd, and I'm not looking for mainstream articles and hysterical, people and the media to determine my game plan, right? And it's quite often the opposite. You're too late by that time, right? They're just trying to get you to, they're trying to sell it off to buy it back. But this time I think it's going to be different. You have to remember, we've been in a raging bull market since March 2020. We've never seen this amount of gains in such a short period of time. Like from March 2020 to the high of December 2021, that is record gains. We were up 120% in 22 months. Like I said, the average return of the S&P 500 is around 12% a year. We had 120% in almost 2 years. Think about that for a second. If that happens, then we had a massive crash here, but then we continue to see higher highs, right? So that just tells you that the bigger the rally, the more aggressive the rally, the more aggressive the sell-off is going to be. The more bullish the bull market, the more bearish the bear market will be. And we saw the exact same thing in crypto as well. But if we just take our fib tool here and go from the low to the high, you can see here we did hit our 1.618, and you have to wonder, when is the game of musical chairs going to end? And if we go from the high here to the low of the previous all-time high to swing low of C19, we almost got up to the 3.618. So you really have to start being cautious when we start to get to those extension levels. Nothing's going to go in a straight line forever. And again, every time there's any bad sell-off in the market, everybody always needs a reason. Same thing here with C19, same thing, or I guess 2021, that was just overheated. I guess there wasn't really any mainstream article. I guess there was the wars and stuff going on. But it always seems like it's timed perfectly with all-time highs into a brutal sell-off, right? C19, same thing. 2008 financial crisis, same thing. And that time we double topped actually. And then massive sell-off. And there's always a reason, but these the reason why the sell-offs are so bad is because we were just due for a sell-off. Market makers were starting to flip and they said, okay, well, there's not really much. We can't really suck every single retail investor in. Pretty much everybody's in. So now the only way for us to make money is to short it. So we flip from net long to net short, then we short it. We make money on the way down, and then we time it with some sort of black swan and geopolitical event or macro event. And instead of going down from, at the high of 2020 there when we were at 340, instead of go from like 340 to 300 or, 275, they couple it with some massive, event in the world, right? Catastrophic black swan. And then they're able to short it even more, make even more money on the way down, exaggerate the sell-off way more than it otherwise would have been. And then they buy the bottom and then they do it all over again. Cycle starts again, rinse, repeat, right? And guess who always loses? Retail. Because 99% of the time, people keep making the same mistakes and never learning. And that's why I'm really focusing a lot of time on this course right now that I'm making an advanced investing and trading course. And I've already spent about 30 to 40 hours on it. And I'm not even through the outline yet. I'm really sinking my time into this 30 to 40 hours because it doesn't matter how much I come on here and I talk to people. Like there's almost 50 people in the Pow Group private community. I've seen it firsthand. Some people will join, they'll join the VIP membership, right? They'll spend the highest money on the membership that you can. I'll do coaching with them for an hour. And 2 months later, they're like, I'm taking a break from the markets. And this is usually 9 times out of 10. I would say 90% of the time, people, even though I do coaching with them, even though I tell them again and again on my videos in the Pow Group private community and live on the public ones on YouTube, people still don't listen. They have to go make the mistakes themselves and then learn. But the reason why I created Pow Group was to help that 10% that wants to listen and not make the same mistakes that I made or that everybody else makes, right? But if you can just be coachable and learn to get out of your own way, so to speak, then you'll do good. But the problem is 90, of those 9 out of 10 people, 80% will quit, right? 10% of that 90% might get back up again and then start to learn like I did. I was the same way. I never wanted to learn. I wanted to do it all my way or the highway. And I thought I was a genius. And then I lost all my money. I lost my money to Quadriga. I was actually just filing my taxes this weekend. What a racket that was. Glad that's over. That took me like 3 weeks compiling everything. But I lost a 5-figure account at Quadriga, right? Nothing I did wrong. It was the company was a scam. And I learned from that. I said, you know what? I shouldn't have had all my money on one exchange, right? I should have been using a hardware wallet. I shouldn't have became complacent. I should have spread it out across multiple exchanges. But I was glad that I learned that lesson with a 5-figure account versus a 6-figure or a 7-figure account, right? So it's all part of our journey, and we have to get there somewhere, somewhere or another. And you're never going to get there by not failing or not making a mistake. So it's better to make the mistakes out of the gate, learn from them, and then also try to not make the mistakes again, and then also learn from people who made the mistakes so that you don't have to make them, right? So that's the whole that's it in a nutshell. And if you're interested in signing up for that, I've already had a couple people sign up for the pre-order. I really do appreciate it. The support, it makes me want to it motivates me to get the course out as quickly as possible. But if you just go to palgroup.ca or pursuitofwealthgroup.com, click on Academy, there's one there. It's $59.99, one-time price. You don't pay. You have lifetime access. You don't pay a second time. It's one-time fee, $59.99. You have lifetime access. That'll get you by until Investing and Trading Mastery 102 is out. So that I also just posted the curriculum yesterday. I might do some tweaking to it, but you can see there's 3 chapters, and I've got quite a few lessons already in each one. So if you want to check out the course curriculum, it's right there on the screen. And yeah, same thing, one-time payment, $99.99, and you can sign up for that pre-course. You don't have to take the first course to understand the second one, but the second one you definitely want to have a little bit of knowledge with regards to finance and the stock market, etc. It's definitely going to be helpful. So really do appreciate all the support. Like I said, I put 30 to 40 hours in, and I'm only in the course outline in the curriculum. So I've got the curriculum, and I've got the basically the content for each lesson within those chapters, but I haven't even started recording it yet. So it's going to be another, at least a couple of months, I would think. But I'll try and get it done as quickly as possible. Like I said, the only reason why I know a couple people have already pre-ordered, I really do appreciate the support. The only reason why it's taking so long is because I'm trying to put as much information in there as possible, and I'm trying to make it as valuable as possible, and just take my time with it, because each and every day I'm always thinking of something that I can add to it. Don't want to make it too overwhelming. I'm not going to try to make it like a year or anything that you have to invest into it to finish the course. You'll probably be able to do the course in about a week is what I'm thinking, start to finish. But you can even refer back to it. You can learn from it. You can go back. I'm going to have like charts on how to set up your charts, what I like to use, the 10 indicators and signals and patterns that I use the most in my analysis, and how to use them. And at the end, you'll be able to test your knowledge and whatnot as well. So looking forward to everybody's feedback. But check that out. If you're interested, take a look. We'll jump into the chat here in just a moment. So Solo, Storage, and BAT lead in the decline. I did add some Filecoin today, just not too long ago, actually. Where is it on the list here? It's actually not seeing too much downside. Not surprising, because it's at all-time lows. So wouldn't expect it to be down double digits or the most on the board today, based on the fact that it's at all-time low support. So we have pretty much a triple bottom there, 228, 230, and then 228, and we just hit 232. So we're right on the all-time lows. This is one of those names that I might add one more time. It's only a couple percent of my crypto portfolio. I would say probably 2 or 3% of my entire portfolio. I have 80%, over 80% of my portfolio is in XRP. So that doesn't leave a whole lot of room for these other projects. And I think XLM is close to 10%. So there's, only a few percent that some of the other ones are able to claim. Same thing with HBAR. It's around 2-3% as well. And I have about a dozen. So at this point, I might add one more time, 2 at the most, but probably may look to just one more ad. And if Filecoin, if this thing goes back to all-time highs, you're looking at about 100x from here. So $1,000 into $100,000, I'll take that risk all day, every day. And the most you can lose is $1,000, right? I have more than $1,000 invested into this thing, but it's all money that I'm willing to lose. Didn't break the golden rule, right? And even if you don't have to go back to all-time high, even if we go back to $70, right? That's 27x. If we go back to $100, that's 40x, right? $1,000 into $40,000. And who knows? We might go back to all-time highs and not stop there. I really like the only thing I don't like about Filecoin is the tokenomics. They continue to add supply, so it's not great for the price, because it's sell pressure when more supply is entering the market. But when this thing really wants to go, it can go. And I do think the technology is great. Decentralized file storage. We're going to need that in a world that's relying more and more on data. Data is certainly not going to get any smaller by any stretch of the imagination. So having that decentralized data storage and file storage, I think, is going to be paramount into the future. And it's just very different use case. There's never going to be millions of crypto coins at the end of it, right? There's going to be a select few. There might be 10 to 20 main ones, and it's going to be different use cases. And then you're going to have the tier ones dominate each use case, right? And I think Filecoin is one of those names that really is going to dominate that use case. And storage is another one, and it's rated at the all-time low. So the charts are very similar on storage and Filecoin. I don't know as much about storage, but I did make a little bit of money on that one. I did sell it. It was more of a swing trade than anything, but I might look to pick up a little bit more storage as well, just to diversify within that decentralized file storage use case opportunity. Got Raging Gun in the house. I see your name everywhere. I don't think I could miss your name here. A lot of comments from you, my friend. Thanks for being a VIP member on YouTube. GME. Yeah, GME has been on fire. Let me just bring that up real quick. Yeah, we closed the day on Friday up 11%, but that might change into tomorrow based on everything kind of picking up steam here and selling off. It's going back up now. What's up, Rod Martin? Yep. Everything seems to be stabilizing a little bit here, but most things down, a couple digits. We did flip into a new day as well. So that reset the percentages on a lot of these. So you can see new candle just opened about 12 minutes ago on all these names. So we're now only down like 2 or 3%. And that's a psychological thing too, right? When people see that we're down 17%, they don't want to cause a panic. They don't want things to be down like 20 or 30%. So what they'll do is they'll sell it off into the end of the daily candle close. They'll reset the timer and then everything. And then, people like, just think, if you looked a few hours ago, you might have saw we were only down like 5 or 6%. And you'd be like, oh, it's not that bad. But if you checked in right before the candle closed, things would have been down like 15, almost 20%. But if you weren't looking and then you came back and you looked again a few hours later, you'd be like, oh, it's only down 1%. So you're like, oh, it's down 5 or 6. Now it's down 1. Oh, actually, it's an illusion that we're actually recovering, but we're not. We're down another 1% or 3% on top of that 15% that we were down at the close. But you know what I'm saying? So it's just a way for them to gamify it even more. We're going to be so rich. Are you buying MJ stocks in the sell-off, or are you waiting to see recovery? Yeah, I actually added CGC, Tilray, and Curaleaf last Friday, I think it was. Friday or Thursday. Can't remember. But yeah, just slowly nibbling. Again, XRP is my largest crypto holding. It's over 80% of my crypto portfolio. And my XRP position is worth more than the rest of my entire crypto portfolio and my MJ portfolio combined. So all of my MJ stocks that I own, and then all of my crypto that I own minus XRP dollar wise is worth more than all of that other stuff combined. So, and like I said, XRP from November is still up 278%, even though we've pulled back 44%. So I could care less, right? Like my average on XRP is like 40 cents. So we're at $1.88. I'm doing just fine, right? And like I said, most of my net worth is is in XRP. But that's because when I was buying XRP, it was never any more than about 10% of my net worth, right? And that's another thing in the course that I'm going to really try to hammer home. Never put in any more than 5 to 10% of your net worth into one asset class, let alone one crypto or one stock, right? Or one asset. So yes, XRP accounts for a lot of my net worth now, but it didn't whenever I was buying it, right? When I was buying it at that 40%, at that 40 cent level, it was never any more than 10% of my net worth. But then after this massive run up, now my net worth is increased substantially, right? But that's an illusion as well. It's not how much I invested. It's just now I'll start to rebalance, right? Now that it's a big part of my net worth, now I'm looking to potentially take profits and then rotate them into other names, right? But when I do that rotation, I'll never put any more than 5 to 10% of my net worth at that time into that next asset, right? I think I'm glad I talked through that, because that just gave me some more ideas for the course as well. I'm 4 minutes behind the live stream, but I made it. Thanks, Hustle, for joining. Better late than never. Yeah, you can always go back as well, right? If you listen to Bob Lighthizer, I don't know how to pronounce, the administration trade policy guy, he clearly says they don't just want zero tariffs, but to balance the trade deficits. It's going to be a majority shakeup and landscape. Yeah, and there's talks about, that Trump wanted to, it was all a method to his madness to get the debt refinanced near zero. So he wants the Federal Reserve to lower the interest rates, and Elon Musk said, end the Fed, right? There's a new thing. There's even bills like going through Congress to end the Fed. So, it might not be a thing for much longer, but, they're trying to get them to bring down interest rates. And this is sort of looked at as the tactic to do that. So we'll see what happens. Very possible that it could. No Way Man says, what is the 200 MA on XRP? It's the 181, I think it was. It's at 185 now, so we just tested it. So yeah, the bottom could very well be in here on XRP. I can't see us going much lower than 175, maybe 150. I can't see us going much lower than that before we hit new price discovery and escape velocity to the upside. So it's looking pretty good. Hey man, thanks. Hopefully we'll get something that will push up CGC and Tilray. The Coke and Pepsi, says Fanapy Growth. Yeah, we'll see. It's been brutal. I'm not expecting any major momentum shift for MJ just yet. And like crypto, blockchain, AI still has to go through its final push up higher, but we're starting to see rotation at a big tech now. So that should bode well for MJ stocks, but we need something concrete, right? Even if Trump came out, or like somebody in the new administration came out, RFK Jr., whatever it is, DEA, HHS, if somebody came out and said, "Hey, we're gonna get rescheduling done," no one would give a shit, right? They'd be like, "That's what you told us last time." No one wants hearsay. No one wants maybe or progress or it might happen or we're working hard to get it done. What it's gonna take is actual concrete results, and what I think that's going to be is safe banking or rescheduling. One of those two, right? Or if they really start to push the narrative of descheduling from the new administration, if that's something that the FDA or the HHS or DEA starts to get behind and say, you know what, we really want to work with Congress to get descheduling done, that might move the needle because that's something that no one would expect. But in my opinion, the most likely scenario is that the market is waiting on safe banking or rescheduling, not just progress, not just the focus to be back on those two as a priority, actual enactment. So when 280E physically, when it virtually goes away, right? When there's no longer that impairment on these companies' balance sheets, that's when the industry is going to reverse. When it actually is set in stone that it's going away and it's gone away and we see the reports and there's no more 280E tax code, right? Cureleaf, Boris Jordan said if not for 280E, they would probably be paying a dividend to investors. That means they would be profitable or else they wouldn't be paying a dividend, right? And they'd have more money hand over fist than they know what to do with. So let that sink in. But we need actual or rescheduling. Rescheduling actually happens, right? 280E goes away, or safe banking, these or uplisting to the NYSE and the NASDAQ. We wake up and these companies in the US are actually listed on the NASDAQ or the NYSE. That's something that would get the market moving as well. You got the crazy sirens going on in the background here. Or McDonald's and Taco Bell. Yeah, I'd rather be the McDonald's of MJ than Taco Bell. I saw it on Skip today. I'm actually going to order some Skip after this. And I saw Taco Bell on there. I was like, who eats Taco Bell anymore? I'm not a big fan of it at all. CVS and Walmart, all the comparisons. You know what I mean? Absolutely. We've been beaten up so much and positive news will help. Yeah, again, we can't just have news. We need concrete news. We need something to actually happen. We got JP in the house. I got a question about Nvidia. Give me something about Nvidia. Isn't going to drop more. Is it going to recover or what? I mean, obviously, I don't have a crystal ball, but we can see what the charts are saying real quick. Again, like we had a POW algo sell alert go off on this thing. We're still in a monthly uptrend, so we did have a double top there at 152, 153, but we're still in a monthly uptrend. As long as we hold 90, we're just fine. And keep in mind, we did a stock split as well, right? So a 10 for 1 stock split. So, but again, we were monthly overbought, right? Anytime here is generally, again, like if you were getting out here, you would have been able to save yourself like a 59% correction. You would have missed that, right? And if you bought here again, then you would have saw this massive run up. And then if you sold again when we got into the monthly overbought territory, you would have saved yourself another 70% of downside. And then if you would have bought here at historical levels when we're usually, that's the bounce zone, right? We even bounced over here, right? That level right there, all buy zones, right? Most people only want to buy when the media is bullish and everybody else is bullish. But again, be greedy when others are fearful and be fearful when others are greedy. And everybody and their dog was greedy here, right? And we're monthly overbought. And the same thing with SPY. We're having monthly RSI bear divergence with lower highs, lower lows on the RSI. So each high has been lower than the previous one. That's bearish. And then higher lows and higher highs on the price. It's going to be bad. And like NVDA, this thing will probably go back down to like 40 bucks, maybe even 20, right? It's just, is it going to take a few months? Is it going to happen next year? Is it going to be 2027? I would say it's more than likely going to be like this. We're going to bottom out somewhere around, 80, 75, 80, come up, form a lower high, and then we're going to form a lower low, right? And it's probably going to look something like that, confirm the monthly downtrend, and then we're probably going to be heading down into that $40 zone. We have support there at 39. So, if you're in this thing, I can't tell you to buy, sell, or hold, but if it were me, I'd be looking, and if I was holding it and I was wondering, if we were going to go lower and I'm looking to sell it, I would probably wait for a monthly lower high. But, if it were me, I wouldn't be owning this thing. I wouldn't be touching it with a 10-foot pole, right? I'd have been out. Well, we had that monthly bull flag, so I would have been out when we confirmed the monthly bull flag and hit the target. So let's just, and we also had this ascending triangle, which we're no longer expecting that because we just broke out of it. So let's see where we could potentially, the example of what I would have been looking at. So I would have been out at like 218. I think that was the target I drew it before. So you go from the low to the high there. We had a very brief consolidation period. We didn't even get to the 0.32 fib. So we confirmed the monthly uptrend and the monthly bull flag all in one go with a higher low and higher high. And yeah, look how close we got to the monthly bull flag target. The bull flag target was 175 and we hit 153. So that's when I'd be getting out, right? You want to sell and go short at resistance and buy and go long at support, right? And we were closer to resistance here. So if you were buying anywhere in this time, right here, like even really here, it's risky, right? But you could have added here right at support. This would have been a great entry, right? 39 was the pullback low. If we held 35, it was a monthly bull flag. So if you entered at 39 and set your stop at like 34, you could have risked about 10%, 11%, and you would have made on that bounce 300%. So risk 10% to make 300%. That's great risk to reward odds. All things that I'm going to be mentioning as well in this Investing and Trading Mastery 102 course. But I've already mentioned it a lot on YouTube as well and in the Power Group private community. But if you're not in the Power Group private community, you'll have this. And then also I'm going to be doing visual. If you're like me, you're a visual learner, I'm going to have visuals. I'm going to have videos. I'm going to have quizzes to test your knowledge and everything right after, and I explain something. I'll give you a scenario and then there'll be a quiz and you'll be able to choose your answer and make sure you understand before you continue it. And then if you want to join the course or join the community as well, you can do that by going to powergroup.ca or pursuitofwealthgroup.com. Join one of the gold, silver, or VIP memberships, and you can join the private community, which is here. And we also have advanced news and report. Shout out to Sid too, a new member in the Power Group private community yesterday. Which reminds me, Sid, we still have to get your coaching done. You signed up for the VIP, so let me know when an hour session works for you. So yeah, just be careful on NVDA. Kramer, yeah, he's a trip for sure. We got Raging Gun, Volcano. The market of 2025 is not the same of 1929. Yeah, I mean, you have to remember 1929, everybody talks about the Great Depression, how bad it was, but no one talks about how big the run-up was, how big the boom was. Again, the bigger the boom, the bigger the bust. There was a very, very big boom, so very, very big bust. If it was little boom, little bust, right? What are we in now? Very big boom. What are we expecting for bear market? Very, very big bust. So in my opinion, like I said, this pullback that we're seeing on SPY, like I said, look at this pullback. Look how bearish and fearful the market is. In 2022 to the low of 2023, essentially, we were down 28% on SPY, on the S&P 500. With all the fear and uncertainty right now, we're only down 17%. Tomorrow we might be down around 20, right? But this is still way better and not nearly as bad as this pullback of 2022. Right? During this pullback, I think Netflix pulled back like 80% in that time frame, right? Isn't that like what crypto's supposed to do? Netflix pulled back 80%. What? But that's because it had a huge boom, right? Bigger the boom, bigger the bust. What goes up must come down. But yes, I do think that mark my words, in the next year or two, the mainstream media, you're going to see article after article. Worse than the Great Depression, worse. But what they won't tell you is that we're still up hundreds of percent from the low of the Great Depression. Right? In terms of percentage, yes, it's bad. It's the same drawdown, but we're still much, much higher, right? We're up and to the right. But again, it's all about perspective. You need to zoom out. People are just looking at the daily time frame or looking at their brokers and seeing 20% down, and they're seeing their portfolio and they're seeing 60% down, 80% down. Oh, this is the worst pullback ever. No, you just bought too high and right before the reversal, right? But if you look out 10 years ago, 20 years ago, we're still up hundreds of percent, sometimes thousands, right? Look at Amazon. Look how brutal the pullback was on Amazon. It was down almost 60%. But from the .com days, when we pulled back 95%, from that low to where we pulled back here, we're still up 30,000%. Like, that's wild, right? So it's all about perspective. And look at the pullbacks on Amazon. 95, 57, 65, 30, 32, 29, 57, right? But what do you notice? The pullbacks are less and less and less, right? You'll have sometimes here where, this one was 57%, but again, the boom was bigger. So the bust is bigger, right? Same thing here. The bust wasn't as big because the boom wasn't as big. Makes sense? Kryptonite, be cautious. Nothing lasts forever. Exactly. Black swan manipulators. Yep. Well, it's black swans. Black swan means you can't predict something coming, right? And if you do it, you're a conspiracy theorist or whatever. All a black swan means is you can't predict something coming, but it's a black swan for 95% of the people, right? But or maybe even 99%. The 1%, the 1% of the 1%, whatever you want to call it, the elites, they probably create the black swans. They know about the black swans. And then there's a saying goes, don't let a good crisis go to waste, right? James 007 in the house. Good evening. Guess who's always loses? Retail. You and me, exactly. That's why you got to swim like a whale, not like a fish, right? Or I guess a dolphin. Swim like a dolphin. You need to be able to pivot with the whales. Fish get eaten. James 007, let's go. Good evening, Raging. I'm pretty sure I met Rod somewhere in Alberta about 10 years ago. No, I doubt that. I've only been here for a few years. Winners don't quit. Very interesting. Listen to what Rod has to say. I'm enjoying the live stream. Thanks, James. I appreciate it. Life is learning. It's about learning how to lose everything, then learn to not care. Yeah, and not lose again, right? And come back stronger. I'm always late, Jem says. Well, like I said, better late than never. Always love seeing you on here as well. Really do appreciate all the support, especially Raging Gun. You've been on here always supporting, and Jam, you've been multiple years now, so really do appreciate all that. We have Chris as well, been a long time follower. Rod, do you like crypto CRO? I'm not. I don't not like it. It's probably not one of my top ones, but I think it'll do fine in the long term. Loaded up $1 Tilray call options, Jan 2026. Good luck, my friend. You got tokenomics, and if the government tells us there's no more cards, no more cash, and our crypto must be inserted into our brain into a chip again, I'll throw away all my extra Bitcoins until they pass that law. When they pass that law, yeah. I mean, it's already happening. I've seen you can like scan your palm and stuff like that. Pretty scary stuff. Yeah, it says 2030, 5 years. Tilray, my largest MJ position, but ACB's last earnings was rocket, was fire. Yeah, they did have great earnings. They're finally starting to turn a corner, and LPs in general are really starting to turn the corner. And most US MJ names are starting to suffer the same fate. And again, it just shows you what the herd does, right? They look at Canadian producers and they say, "Oh my God, they're garbage. Look at how good the MSOs are doing," but they don't understand that the LPs are 7 years ahead in a legal market, right? It's still not federally legal in the US, and it's been almost 7 years in Canada. So they have 7 years of operating in a legal framework for 7 years at a federal level in a major G7 country. And the US, right, we're starting to see the same thing, price compression, right? People are leaving and going back to the black market, and price compression, saturation, a lot of competition, failed high taxation, failed reform policies. So all of these things are making it worse. And I would argue it could even be a lot worse. There's probably going to be way more bankruptcies and whatnot and insolvencies because there's way more competition in the US. And now you're starting to see light at the end of the tunnel for these LPs, but people are making the same mistake again. They're jumping when it's already like when it was bad as it was probably going to get for the LPs, they're jumping ship to go into MSOs, but then they're starting to go the same fate, the same route. And then people just don't learn. They do the same mistakes over and over again. And now they're getting burned with MSOs. Those are down 80, 90% plus from all time highs. And now everybody's just unsure what to do. Right? So you got to have a long-term plan and diversify. My dudes, Oxley is the silent jaguar. Yeah, it's a solid pick for sure. Holding well. It's crazy to think that CGC, Canopy Growth, would be the same price as Oxley if it didn't do a 10-for-1 reverse split. That's crazy. CGC was a $60 stock and Oxley was only just under $3. But the fact that they're still both like 8 cents not factoring in the split for CGC is mind-blowing. Life looking good. Yep, you have to keep a positive mindset. 3 months, that's what we need, time. All right, going to end it there. I think that's all everybody's comments. We've got almost 60 viewers still on the live stream here after 51 minutes. So really do appreciate all of the support, everybody hanging out. Always, it's crazy. I come on here, I never really know how long it's going to be. I always think, oh, come on, do a 20, 30 minute live stream. And then I blink and it's an hour. And yeah, I wish that all the jobs I ever worked in my life were as entertaining as this. And that's why I'll be doing this until my very last breath, right? I enjoy it. It's fun. Yeah, it doesn't even feel like work. So thanks for making it what it is and always enjoyable. And look at the quality of the comments. Pow, boom, crack, smash the like button. Appreciate it. Yeah, so, oh, I just saw some stuff pop up here on the, I don't know what happened there. I think whoa. Yeah, my comments were delayed there. I see some more coming up here. 3 months, that's what we need time. Larry Fink, he's the richest man in the world. Well, BlackRock pretty much runs the world. Thoughts on Warren Buffett buying STZ Indirect Edition of CGC? No, I wouldn't. I mean, maybe. I can't see him betting on alcohol because alcohol is kind of on the downslope. But you know, alcohol and MJ probably recession proof. So maybe he's betting on a recession, maybe even a depression. And guess what? Alcohol is a depressant. So I honestly lost respect to RFK after the last comment he made. He was a big advocate for the industry. Yeah, we'll see what happens. You have to wonder, right? It's all waiting for MJ crypto, just waiting for crypto, big tech, AI to, and then I bet you they'll do a 180 again. 280, now check this out, dudes. Oxley going to pay a massive dividend soon. Yeah, we'll see what happens there. I'm going to run through these a little bit quicker here. Nvidia doesn't have time to drop to those levels. Yeah, well, I hope I'm wrong, but I don't think I am. I think the market's about to behave differently than any chart analyst can predict. It will be different. Yeah, those are, just be careful when you say it'll be different because very famous last words a lot of the time. One thing I've noticed about the markets are they're usually the same, not identical, but there's a reason why they say the saying goes, it doesn't always repeat, but it rhymes. Why does it rhyme? Right? It's because market makers are always market makers and retail is always retail. Retail always loses, market makers always win. There's people churning, there's people that quit, come into the market every day, people that quit, the same mistakes keep getting made over and over again. That's why it rhymes. There's new people turning 18 every day. People die, people born, people turn 18, people retire, people get out of the market, get into the market. So again, it's just that circle of life, right? And then the same thing keeps happening. And we're creatures of habit, right? We just keep doing the same thing over and over again. We're basically insane, expecting different results, right? But yeah, there's the few minority, maybe the few percent of the world that learns from it, but the majority keep making the same mistakes. They exit the market. They say, this isn't for me. Every year, new people come in, they keep doing the same mistakes, right? It's just human psychology and emotion, and emotions usually never change. Crypto continues the dump. Did you sell some XRP? No, not yet. I'm still holding my average is 40 cents. So I'm not taking any profit until $4. Dolphins are nice. I like I like dolphins. Dolphins are nice. Smash the like button, pal group. Appreciate it. Smash, pal group, pal boom crack. I'm going to dump MSOS when we get a decent bounce. No interest in it anymore. Yeah, I mean, there's just so many uh, reasons just not to own it, in my opinion. Like you're paying a fee for them to lose 80, 90% of it. And like, just look at the top 10 holdings. It accounts for over 90% of the holding or the fund. So you could easily just look at the holdings and then go buy those. And it's basically the same and you save yourself the fee, right? Nature says, thanks. Thank you, Rod. My pleasure. No problem at all, Nature Jam. Appreciate it. Thanks for joining. When does the rescheduling hearing continue? There's really nothing. There's no timeline at all. Done for the day. Let's all get sauna time. Some sleep, some juice. That's actually exactly what I'm doing after this. I'm going to get some skip, and I'm going to go to the sauna first. And while I wait for my skip, I'm going to do the sauna, maybe even the steam room, maybe even the pool. Pool opened up again in our condo, so I'm loving every minute of it. Thank you for the live stream. Much appreciated. My pleasure. Thanks again for joining. Famous last words. It will be different this time. No, it won't. Everything has been done. Everything under the sun has been done before, and the charts don't lie. Yep. Keep a clear head. Follow the charts. Absolutely. All right. Always a blast. Thanks again, everyone, for joining us on the live stream, and we'll see you on the next one. Take care.